Hey, good morning. Let's go over today's trade plan. So in the overnight session, we got a pretty strong sell-off, and the market ended up going all the way down to the 29 quarter to 31 quarter zone, where responsive buyers were active. Looking at the other markets, 1061 was a strong area of support in the Russell, which was tested in the overnight session, and buyers were active there as well. So at this point, heading into the open, we know that the larger time frame bias is clearly bearish, and it has been since the beginning of the year, but the market has tested some strong support, and we can attract larger time frame buyers here, and the net result from any short covering that might come in and value seekers jumping in here at the lower prices can drive the market higher, at least on the smaller time frames. It doesn't mean that the overall bias is going to shift, that is going to remain bearish, and we can still expect reactions at the resistance zones on the way back up, but we need to be careful shorting the market at too aggressive of a price. So right now in the overnight session, the market has been balancing between initial support and pre-market resistance. If off the open we can break above the pre-market resistance zone, then those upper zones at 52.5 to 54.5 and 58 to 60 would come into play, with potential to test 65 to 68. That would be a bit of a stretch and a short-term range extreme on the upside. Most likely, sellers will defend every resistance zone on the way up. Now, on the downside, 29 quarter, 31 quarter coincides with that 1061 strong area of support in the Russell. If we break below 29 quarter, 31 quarter, then we can get short-term long liquidation into the 18 to 20 zone, and possibly the 15 high volume node and 09 quarter to 1175. But below 18 to 20, the larger time frame buyers can start being very aggressive and active again. So even 18 to 20 can be defended, but the 15 high volume node is a strong area of support, and the 09 quarter to 1175 is a decent area of support where we can expect a reaction and responsive buyers can be active. So at this point, heading into the open, we have to be careful trading within this range, and it's best to actually wait and let the market provide you with a bit more information. How we react to 44.5 to 46.5 is going to help set the tone for the early morning session. If we can break out above 44.5 to 46.5, then, like I said, there is potential to go up to at least the 52.5 to 54.5 area, and possibly 58 to 60, which is a pretty decent area of resistance. So 52.5 to 54.5 is an area that can be taken out on the day time frame. It would be the first decent area of resistance, given the larger time frame bearish bias. As long as we're not seeing any major upside momentum, it's worth a shot to short that zone. 58 to 60 is a very good spot to enter short, and 65 to 68 is an automatic short on first test. So right now, given that the market has tested larger time frame support, if we start attracting buyers here, then the market can simply balance and consolidate this huge move that we've seen overnight. And if the buyers fail to show up and the sellers continue to be aggressive and the market's holding below pre-market resistance, and then actually starts breaking below initial support, and TF starts breaking below 1061, then those lower support zones would come into play. But right now, given that the market's so stretched, so exhausted, and bouncing off of larger time frame support, we want to be patient and careful on shorting it at too aggressive of a price, because right now we're getting that bounce off that 29 quarter, 31 quarter, and that can lead to a test of some of those upper resistance zones where we'll look to short the market and at least get some sort of reaction out of it, and look for some consolidation and balance, especially if the market starts hitting some of those higher zones at 58 to 60 and 65 to 68. So those are the main ideas heading into the open. We will look for trades in both directions, but we are still going to continue to be more active on the short side, because the long side made sense at 29 quarter, 31 quarter, but now at these higher prices, if you're going long, then you need sustained upside momentum to support that idea. because now going long is not a location-based idea. So if, for example, we get a breakout above 44.5 to 46.5 and you want to trade it on the long side, just realize that we have resistance right above at 52.50, and unless we're getting a lot of momentum to the upside, major upside tick readings, the long side can be more risky given just how bearish all the markets are on those larger time frames. So our focus will remain primarily on shorting the market, but at the better resistance zones. 44.5 to 46.5 would only make sense if we were seeing a complete lack of upside momentum and we got a failed breakout attempt, for example, at pre-market resistance, then perhaps we can look for a short over there. But the safer zones are the upper resistance zones. So those are the main ideas. Let's see if the buyers actually show up here off the open, and we will take it from there.